Forget the moon talk for a second. The real story isn't about Bitcoin going up. The real story is Bitcoin is refusing to stay down. We saw a 40% drawdown from 126,000 back in November, but a floor at $60,000 held like concrete. The people left are the only ones who understand that Bitcoin has consistently outperformed the S&P 500 and gold in every single global crisis since the 2020s. We aren't waiting for the bull market, we're in a silent phase where institutions and smart money are absorbing the entire supply. If you haven't already, hit the subscribe button and now let's get into it. So something that people aren't talking about enough is a Morgan Stanley ETF they just launched. So they just broke a century of records in their first week. They saw over 100 million in inflows. That's a firm that's been around for the last 100 years and they called it their best launch ever, launching a digital currency that they've been ignoring for over a decade. So then we have Charles Schwab to launch direct Bitcoin Ether trading to compete with Robinhood. Charles Schwab is rolling out crypto trade and allowing clients to buy Bitcoin and Ether in the coming weeks. So again, this is a huge development to allow retail investors to finally be able to buy Bitcoin very, very easily. So if that hasn't convinced you enough, let's look at cold hard numbers. We just saw the stock market hit a 333 signal. So what does that mean? It's 3 gains for 3 straight weeks. This has only happened 3 times in the last 76 years. So every single time this triggers, the market sees an average of 33% return over the next year. So Bitcoin is a liquidity sponge, which when public equities are in a generational bull run, as analysts like Tom Lee are predicting for the next 24 months, Bitcoin doesn't just grow, it absolutely dominates the market. We've seen it happen before. We saw it in 21, we saw it in 17, and we saw it in 2013. We're entering one of the most generational wealth building moments of your life. And why does it explode? Because it's hypersensitive to any new capital that flows into the system. So for me personally, if we aren't seeing 125,000, 130,000 all-time highs over the next 6 months, I'll be extremely shocked. It doesn't mean that we're heading directly to 126,000 again. We could sit around for the next couple of months. I mean, looking at the chart, we've just been rejected from the bear market support band. So looking at the chart, we've been in an uptrend since the 29th of March. We've been using the channel and we've tested it now 4 or 5 times. We've just broken above the bull market support band, as Benjamin Cohen keeps mentioning. If you haven't already, I'm sure you have, go check him out. But we are seeing a rejection. So a rejection at the bull market support band, again, we saw it on the 15th of January. We lost support on the 28th of October. So this is the first real attempt we've got to get back above it. And if that happens, it means absolutely everything will change again. And we're officially no longer in a bear market. So will that be the quickest bear market in history? Yes. Does it mean it's impossible? No. On average, it takes about 12 months from the top to the bottom. We're currently about 6 months in. So for you guys who believe in the regimented cycle, who believe we have to top in Q4 of the post-halving year, then see a low 12 months later, you can close your eyes now and turn the video off because this isn't for you. What we're seeing right now is a test of the bull market support band, and it doesn't mean that, again, we're going to break above it. We could see a rejection and head back lower. And if that's the case, the guys who are predicting the low coming around August, October time, you're probably going to be right. We could bottom again around $60,000, and to me that's very likely impossible. But we should have our answer over the next week or 2. If, however, we do break above the bull market support band, we could see the CME gap get filled. That's currently priced at $80,000 to $82,000. And again, if that gets filled, we've got our next supply zone, which is currently priced around the $90,000 zone. So if all of that goes well, we break above the supply zone, and then we'll be heading back to 100,000. And at that point, I think even the most bearish of the bears will start to turn bullish again. But let's not be biased, even though we all know it's heading higher in the long term. Let's talk about the short term and what could actually happen. So if we do get a rejection here at the bull market support band, we could definitely be heading back down to the lows around $60,000. If that gives way, we've got a strong demand zone around the 58,000, 55,000 area. And if that drops any lower, we've got the 300 EMA saving us around the $45,000 zone. But in the short term, we're definitely in a bullish uptrend. You can call it what you want. You can call it a relief rally. You can call it a short-term rally. It's still a rally. And while we're in a rally, there's absolutely nothing that the bears can do about it but sit on the sidelines. So what would I do if I was sat on the sidelines right now with $100,000 in capital waiting to deploy? I certainly wouldn't be deploying it right now. If you've been watching for a while, you know I deployed quite a lot at $60,000, $65,000. I'm not interested in adding more to the position right now. So really, you're hoping for a rejection and praying that it drops back down to $60,000 so you can start to deploy. At that point, I'd definitely start deploying 25%, 30% of my liquidity, just getting into the market again. There's no guarantee that we'll see $60,000 again, but if we do, every single week I'd start deploying $5,000 to $10,000 and hoping it drops even further down towards the $45,000 range. But there has to be a point where the trend finishes. You maybe didn't get all your liquidity into the market. So what do? You have the line in the sand on the other side. So maybe you can call it the bull market support band, which is currently priced around $78,000. If we saw it close above 80, 85, and if you really wanted to be slightly more risk adverse, maybe 90,000, that's your point where you start dollar cost averaging the other way. So yes, you missed the bottom, but in the long scheme, if it goes to 1 million over the next 5 years, you haven't missed it. So if I could stress to anyone is own a Bitcoin, own as many Bitcoin as you possibly can over the next 5 to 10 years, because I believe that's going to be life-changing money. Not financial advice, and always do your own research, but if you ask any analyst in the entire world, and they'll all give you a target of 500,000, maybe $1 million per Bitcoin over the next 10 years. So you missed a $60,000 bottom, but you managed to get it at 90,000, which is still producing a nice 10x over the next 10 years, if it all goes to plan. There's a lot of people in the comments all the time saying, Jordan, we're at the all-time highs in the stock market. Surely you wouldn't be buying now. Surely it's going to be falling. Surely there's no point buying the top. So let's look at data of what happens when you actually buy the top of the stock market. So looking at the data, buying the stock market at its all-time high is better and outperformed buying it any other day of the year, which is absolutely wild. If you're not interested in buying Bitcoin right now, fine, buy the stock market. Buy the stock market at its all-time high because it's outperformed any other given day. Why? Because you're buying strength on top of strength. You're buying the momentum. You're buying the momentum break. So returns get more returns, the strengths get stronger, and you're buying again. So you've got that opportunity right now. Eventually that rolls into other assets such as Bitcoin, such as silver, such as gold. We saw it play out in 21, we saw it play out in 17, and we're seeing it play out eventually again. So the stock market has just made an all-time high, the NASDAQ has just made an all-time high, and Bitcoin is coming. People chase the rallies, and I think that's exactly what we're about to see here. Is the next couple of months could be setting up for the stock market to hit 7,500. We could be seeing 8,000 over the next 6 months, 12 months. Tom Lee thinks we're going to see 8,500 over the next 24 months and is predicting another bull market over the next 2 years. And another thing to pay attention to, we're seeing the stock market hits an all-time highs while retail sentiment is at its all-time lows. And who's buying? Institutions and smart money is deploying capital at record paces. So the only people again are losing out is you watching this video, the retail investor who is scared to start deploying the capital, the ones who are sat on the sidelines who are 50% down saying, I'm not going to buy until, I can't wait until. I could bring up 100 different data points over the last 100 years where retail sentiment has been at its all-time low, and institutions are taking advantage of this and becoming more and more wealthy. So my final outlook is I believe Bitcoin is going to outperform gold. I think it's going to outperform silver. I think it's going to outperform the stock market over the next 12 months. And why? Because the White House is finally part of it. Yes, they launched a token. Yes, they destroyed the market over the first 12 months of being in term. But Trump, like he mentioned, he wants to make the US a crypto capital of the world. And I believe over the next 12 months, he'll really start promoting it again. So where does that leave you? It leaves you on the sideline potentially if you haven't already got an entry point. But like I mentioned, if you haven't got an entry, look how the price moves over the next couple of weeks and we'll go from there. If you haven't already, hit subscribe and I'll see you tomorrow.